Silver has not gone back to that price except once since then. I own silver. In my view, it will eventually go there again. I'm not sure when. I'll have to watch your show to find out when, but I know that silver's going to go to new highs someday. Gold too, probably. But at the moment, I'm not buying gold. I am buying silver because silver, on a historic basis, is somewhat depressed. But both are going to do well because we're in a world where there are very few, if any, restraints on printing money anywhere. So be worried.
Renowned investor Jim Rogers is betting big on silver, viewing it as significantly undervalued compared to gold in today's market. Despite silver's notorious volatility, Rogers maintains his position and expresses strong confidence in the metal's long-term potential, driven by historical precedents and current economic conditions. Rogers highlights silver's dramatic history, particularly its 1980 peak of $50 an ounce during the Hunt brothers' speculative frenzy. Since then, silver has only briefly touched those heights once, creating what Rogers sees as a compelling opportunity. The 2010 to 2011 rally demonstrated silver's explosive potential with a 400% rise from its base, according to Bloomberg data. A similar move from recent lows could push prices well beyond $100, while silver's inflation-adjusted 1980 high would equal approximately $140 in today's dollars. Current market dynamics support Rogers' thesis. Gold has surged 86% to $3,342 since January 2022, fueled by the Ukraine-Russia war, Middle East tensions, and persistent central bank purchases. Silver squeeze trends indicate growing momentum in precious metals markets. Rogers' strategy reflects his conviction in silver's relative value. While bullish on both metals in the long term, he's actively buying silver over gold due to its historical undervaluation. His optimism stems from global central bank money printing, warning investors to be worried about currency debasement. Industry forecasts support Rogers' optimistic timeline. For silver, analysts predict the metal will reach $50 an ounce in 2025 and hit $77 before 2028. These estimates are based on 50-year price trends, inflation expectations, and the historical correlation between gold and silver prices. Before we begin, don't forget to like, share, comment, and subscribe. Hit the bell icon to stay up to date with our latest market insights and timely updates.
Yes, I bought more silver recently. I don't know. I think I bought more gold recently. Yes, I have never sold any of my gold or silver. I sometimes give it as gifts, but no, everybody should own silver and gold under the bed. You never know when you might need it. You hope you never need it. You hope your kids never need it. But everybody should have gold and silver in the closet. I just want to, because I'm older than you, throw in one correction. The silver sold at $50 an ounce in 1970. It's nearly 1980, yeah, end of 1970, 1980. You remember the Hunt brothers? You remember the stories? You know, the Hunt brothers were very, very rich heirs of who at one time was known as the richest man in the world, H.L. Hunt, a Texas oil man. And the Hunt brothers were devout fundamentalist Christians. And their reading of the Bible was that the Bible said that silver should be the equivalent of the price of gold. And they could read. They got out their Wall Street Journal and they could see, oh my God. So they didn't stop buying. And they had a lot of money and a lot of margin. So they just kept buying until in Chicago, in the pits, they changed the rules so that the Hunt brothers couldn't meet the margin calls anymore, even the Hunt brothers. And so the price of silver collapsed, totally collapsed. Horrible bear market. But that was a long time ago. Silver has not gone back to that price except once since then. I own silver. In my view, it will eventually go there again. I'm not sure when. I'll have to watch your show to find out when. But I know that silver's going to go to new highs someday. Gold too, probably. But at the moment, I'm not buying gold. I am buying silver because silver, on a historic basis, is somewhat depressed. But both are going to do well because we're in a world where There are very few, if any, restraints on printing money anywhere. So be worried. Most paper money in 2026, 2027 are going to be under duress because there are no restraints anymore. No central bank would stand up and say, we must have sound money. He'd lose his job that day before he finished his speech. And therein lies the problem. That's why I, anyway, own gold and silver, and I hope I'm smart enough to buy more if the opportunity arises. I don't like what I just said, Jimmy. I don't like it at all. But as I look out the window, those are the facts. Are you suggesting I should sell my silver and gold? I read the same newspapers you, all over the world, and everybody else. I don't see any reason to sell my silver and gold. Not yet, not from the newspapers I read anyway. And I know that many governments around the world think that they can do just about whatever they want. I mean, you look at what's happening in Washington or the middle, I mean, you pick the place. They all think everything is okay. If you read Washington, they will tell you, don't worry about anything. We've got more guns than we need, and we can do whatever we want. And as long as they think they can do whatever they want, I get very worried, especially since I see the state of the world. A lot of people have a lot of guns now, and a lot of people have huge debts now. And markets think everything is great. When I look out the window, I see everybody's happy in Asia and everywhere. I repeat, when everybody's happy, somebody should ask questions. Most countries around the world are increasing their defense spending. Whether they should or not is irrelevant. They're all doing it. And if people are spending more on defense, the companies are going to do well. And the stocks normally will do well too. Now, we can sit here and say peace is better. In the Pentagon, they don't say peace is better. They say we need more tanks. We need more planes. We need more howitzers. And they get them. And they're saying that all over the world now. I didn't say this was good for you and me. I said, oh, for the world. I'm just telling you that's what's happening. And we better be aware of what's happening, or we're all going to suffer. Well, I mean, yes. And I'm sure we can get more figures too, more stats too somewhere. Everybody, I don't know anybody who's saying let's cut defense spending. I don't know any country in the world that's trying to cut their defense spending in 2026, 2027. I mean, defense contractors think think they've gone to heaven. I mean, everybody wants more guns, and most countries are getting more guns. Now, the problem for you and me is, oh my gosh, when, where? More, I mean, both when is extremely important, but where too. I mean, if they're all shooting at each other in St. Louis, it's not so important as if they're shooting at each other wherever. You know the world as well as I do. It could be a serious problem for all of us. I don't remember any politician in my lifetime who said, oh my God, the world's falling apart and it's my fault. They always say, no, it's the evil foreigners, the evil speculators. It's not your fault. You're a good, honest Canadian citizen, a good American citizen. It's those evil speculators. It's those evil foreigners. They're not going to say it's our fault. They're going to say it's James Conner and people like him, foreigners.
President Trump's evolving tariff policies are generating significant market volatility, prompting dire warnings from veteran investor Jim Rogers about an impending economic crisis. The administration's trade stance has already demonstrated its market impact, with the S&P 500 nearly entering bear territory after Trump's April 2nd tariff announcement, only to rebound when tariffs were paused. The respite appears temporary. Trump has announced new tariffs of 25% to 40% on key trading partners, effective August 1, 2025. Currently approaching June, U.S. effective tariff rates are near 10%, but the Yale Budget Lab estimates they could double if negotiations fail to reduce the proposed increases. Rogers provides a sobering historical context, noting that severe bear markets typically decline 50% to 70%, with individual stocks, especially high-performing companies, often falling 90%. His experience informs an even grimmer prediction. The next U.S. bear market will drop at least 70%, representing what he calls the worst bear market of his lifetime and likely the worst bear market of investors' lifetimes as well. The immediate economic implications of the tariff surge are already becoming apparent in forecasting models. Economists note that tariff policies have a significant impact on projections and increase risks on both recession and inflation fronts. Current expectations anticipate a significant slowdown in GDP growth over the next 2 years, with an average of about 1.5 percentage points lower in 2025 and 2026 compared to the prior 2 years. Let's get back to the interview.
Central banks around the world, as long as I've been in the business, all they know is print more money, pump more money into the system, bail out the system, save my job, save my job. They don't care about the system. They care about saving their jobs. And that's what they're doing again. In my experience, that's not different. That's what they've been doing since the beginning of time, since the beginning of central banks, I should say. In my lifetime, the bad bear markets, the typical bear market has already always gone down 50, 60, 70%, sometimes, and some stocks go down 90%. The high flyers usually go down even more. So I will tell you unequivocally, the next bear market in the US is going to go down at least 70%. I will tell you it's going to be the worst in my lifetime. And I'm older than you, so it means the worst in your lifetime because it's been the longest without a problem ever. And the situation continues to get overextended, more and more, I should say more and more extended, or worse, depending on who's commenting. In my view, what's worse, Alan Greenspan and those guys will tell you, don't worry, we have it all under control. You remember Alan Greenspan? Well, he's not there anymore, but I'm sure if you call him up, he'll tell you, don't worry. It's all under control. And even if you don't call him up, he's going to tell people that. Well, Jimmy, I repeat, that's what's always happened in the past. Mr. Greenspan will tell you it's different this time. Don't worry. And I will tell you, no, it's not different this time. It's always happened in the past, and it's going to happen in the next bear market too. And one reason I say that is because the debt in the U.S. is so unbelievably high now. The U.S. is the largest debtor nation in the history of the world, and the debt gets higher every week. So how can we not have a bad bear market? Now, maybe I'm wrong. Maybe the central bankers are right. They have solved the problem. But I repeat, always in the past, that's what's happened. Well, you just said it. I mean, all the markets well, let's just use Asia. The markets in Asia are under pressure for good reason. Many of them have been extremely hot. I mean, the Japanese market was down for 35 years. It's not a typo. Down for 35 years. And now it's making all-time highs. I mean, when the central banks start printing a lot of money and the politicians do all they can to help the market, it's always gone up. Pretty simple. Doesn't matter whether it's correct or not, just that's the way the world works. And that's what's happening now. Everybody, nearly everybody, is having a good time. So that leads me, I guess because I've been around too long, to worry. When I know everybody's having a good time, I have to ask questions. You just said the S&P is at an all-time high, so that's what I think about. I've sold my U.S. stocks, but I can see what's going on. I remember back to what we were discussing. My very first job, I was sitting there doing a spreadsheet. My first day, first week on the job, and some senior guy came running into my office mate and looked it down at me and said, "You still doing spreadsheets?" And, I felt a little embarrassed, but I will tell you, that guy no longer has a job. Well, he didn't have a job very long because he was too good to do spreadsheets and to do deep research. He was above all of that, and soon he was out of the business. So I happen to still know that those who are willing to do their research and willing to do the work will probably be successful in the end. And it's usually the ones who love what they're doing who are most successful. And I happen to love what I was doing. All these signs of weakness sometimes are considered bullish. I mean, if everything is bad, it can only get better. And so we should all pile in and buy. I am not of that persuasion. I am not piling in and buying. No, no, no. I see markets around the world, many of them at all-time highs. And to repeat, when everybody's happy, in my view, somebody should at least ask questions. And I only know one or two markets that aren't wildly high right now. You mentioned China. I will also mention Uzbekistan, where I do own shares and where I bought more recently. But most markets around the world have been going up since 2009. Jim, that's 16 years. That's a long time. That's the longest in American history. So maybe it's going to go on forever. Mr. Trump will tell you, don't worry. He's got everything under control. When Mr. Trump tells me not to worry, I worry even more. So I hope it's going to go on forever, but I doubt it. It never has.
Silver and gold remain essential assets in today's increasingly uncertain financial landscape. As central banks continue to print excessive amounts of money and global debt levels soar, confidence in fiat currencies is steadily eroding. Markets appear overstretched, and with the threat of a severe downturn looming, investors are once again turning their attention to tangible value stores. In such an environment, both metals stand out as reliable hedges against inflation, currency devaluation, and systemic risk. Silver is significantly undervalued on a historical basis and tends to be more volatile, making it especially attractive for those seeking higher returns. It also benefits from growing industrial demand, particularly in the clean energy and technology sectors. Gold, meanwhile, remains a cornerstone of financial security, trusted for centuries as a dependable store of wealth through every major crisis. Are silver and gold preparing for their next big move? Share your thoughts in the comments below. If you enjoy this video, don't forget to like, share, and subscribe. So hit the bell icon and turn on notifications to stay updated. Your support enables us to continue delivering the latest market insights to you and the broader community. Thank you for tuning in.